Hello, this is John Najarian for Market Rebellion. All right, folks, let's take a look at what's going on with jobless claims, because jobless claims are something that we're all concerned about. Even though the market's back, in the case of the NASDAQ, to these positive returns on the year, and in the case of the S&P has returned dramatically from a 30% sell-off to now being down less than 10%, nonetheless, all of us collectively realize that with 33 million Americans out of work, filing for those jobless claims that came in a little over 3 million again this week, we realize there's a lot of work to do to get the economy back on its feet. The good news is there's a lot of optimism about that because we're seeing this return in the stock market, and keep in mind, stock markets are forward-looking. So when we see the Dow Jones Industrials, S&P 500, as well as NASDAQ making these dramatic V-shaped moves, doesn't mean that it keeps going, but it's certainly a positive step in the right direction. And I think there will be a definite break between some of the red states and blue states as far as getting back to work, because Texas, wide open, Florida opening up, Georgia opening up, and even in blue states, we're seeing a lot of folks going back into cars on public transportation and walking. How do we know that? By Apple Mobility and Google Trends. Both are showing us that Androids are moving around, and by the speed that that particular cell phone is moving, you know it's in a car, for instance. If it's at a very slow pace, you know it's John walking or whatever. But there are a lot of metrics that are being used to determine exactly how fast things are reopening and what it will mean for our economy going forward. So we've all been hearing that states are beginning to open up in the United States. What is going to be the impact as they open up? Obviously, we're all concerned that there not be a second wave, or at least not a significant second wave of infection. And hopefully, COVID-19 is not something that you can reinfect somebody with. So as we start to see these states reopen, one of the things to be aware of is that will drive the economies in a good way. So as long as we do it properly, as long as there's some spacing and perhaps masks and so forth, we will see economies start to come back. And that's why the market has come back so dramatically, folks, from a 34% sell-off from the February high all the way down to the March low to now recovering to where the NASDAQ is actually back in positive territory for the year. That's amazing. But then tech stocks driving the returns in the NASDAQ, not nearly as unusual as perhaps an industrial stock driving a recovery, which we are not seeing right now. And as the U.S. recovers, I think it's important to note that this just makes the dollar all the stronger, because other economies around the world continue to be shuttered and they're not getting the stimulus that we got here in the United States. So without that multi-trillion-dollar boost from the Fed, without that multi-trillion-dollar bailout by Congress, these other economies are going to struggle. As they struggle, look for the dollar to remain strong. I am John Najarian. Thank you.